President Trump announcing sweeping new reciprocal tariff rates taking effect August 7th. Rates are ranging from 10% to 41% on 68 countries and the European Union. That includes a 10% universal tariff on imports into America, which goes to 15% for any country with a trade deficit with the United States. And it spikes even higher for about 15 countries who are facing additional penalties. The president is hinting at more trade deals to come, marking a major shift in U.S. trade policy. Joining me now is U.S. Trade Representative Jamieson Greer. Representative Greer, great to have you this morning. Thank you so much for being here.
It's great to be here. Thanks for having me on.
So can you encapsulate where you are on the trade deals and what we should expect to come as of today?
Sure. So first of all, like you pointed out, for dozens and dozens and dozens of countries, we have tariffs at 15% and above, some as high as 50%. You know, China with all the tariffs on top is well over 50%. So these are the highest level of tariffs that we've seen. And this is a great deal for the country. And the president has also agreed that if a country has another plan where we could have some level of tariff, but also some investment and purchases and market opening, that we can have some deals. And so you already know about a bunch of deals we have, you know, Korea, Japan, Indonesia, EU, et cetera. There are others available if the president wants them. You know, at some point, you know, his view is maybe a tariff is better than a deal. So we certainly have some in the offing if he wants them, but we're very focused on making sure we can protect American manufacturing and be able to reduce our trade deficit.
Well, I mean, you know, some of the details of these deals are just compelling, given the fact that the president has gotten these countries to commit to hundreds of billions of dollars of investment into the United States. That was one of the key points of the deal with the EU, key points of the deal with Japan and Indonesia. Is that what the president wants to do? He wants to see a commitment from these countries that they're going to create jobs and send billions into America?
Well, remember, the president's goal here is to reduce the trade deficit and to reshore manufacturing and to really use tariffs as a tool of trade policy and economic policy like it's meant to be used. And so with some of these countries, it makes the most sense to open their market while retaining a tariff. Some of the countries, you know, they've made commitments to invest in the United States and to provide investment funds or facilities for the president to use to invest in the United States. Most of the countries are committing to purchases. And so he's really just country by country going through, and he's hitting the sweet spot with each one and what's going to be the best way to get down the deficit, maximize benefit for the United States and American workers and our industries.
And the revenue has been significant given the fact that we just saw actually a budget surplus in the month of June, largely because of the tariff revenue. How much revenue have you been able to raise so far this year as a result of tariffs? And what is your expectation that number will be for the overall year?
So we're already well over $150 billion in revenues so far. And remember, we've only really had tariffs in place for a few months, and they're escalating now. You know, we expect this year it'll be several hundred billion, and next year it'll be even more than that. I mean, this is a real revenue stream. I mean, remember, historically the country functioned on tariff revenues before we had an income tax, and you know, there's always going to be a mix of revenue streams for the government. But tariff revenue is an important byproduct of the president's efforts to get that deficit down and manage relations with these countries.
And I know you're also talking about non-tariff barriers when you're talking with your officials and friends in these other countries. That brings me to China, because there are so many non-tariff barriers that communist China has as really acting as a bad actor on the global stage. Jamieson, what would a deal with China look like as far as being a victory for the United States? What do you want to see China do?
Well, so first of all, as I mentioned earlier, tariffs on China right now, all in, are about 55%, which for us is a good deal, right? They've been a very challenging actor on trade for a long time. We're going to trade with China. We want to have a good, healthy trade relationship with China, but there are certainly problems we have to correct for. In the future, if we have some other kind of deal or modification with China, obviously, we'd want to talk to the president and make sure he agrees with that. But I would envision something that is much more balanced, much more open to the U.S. and protects our industries here at home. I think you can find a spot where you can have all of those things. Obviously, the Chinese have to agree to that and be part of that. Maybe they want to, maybe they don't. But President Xi and President Trump, they have a good relationship. We are trying to actively have something that's good for American workers and American businesses. But it certainly takes two to agree to that kind of setup.
And I know the president has been able to open up lots of countries to U.S. businesses. He's also been able to get certain countries to do away with the digital services tax and other non-tariff barriers. But China is a special case, and China has been tougher than the other countries, I assume, because they're undermining the United States at every turn. Whether it's surveillance or intellectual property theft or bringing pathogens into the country, fentanyl, COVID cover-up. How do you deal with those kinds of things? How do you negotiate with a player that has shown us that they're a bad actor?
Well, first of all, you have to understand and acknowledge all of that. Everything you just said, Maria. I've been negotiating and dealing with the Chinese for many years. I've represented U.S. companies who have suffered from dumped imports from the Chinese. At the same time, this is a major economy. This is a big country. We have to be able to get along with these folks. Their economy and our economy, it's like a square peg in a round hole. They don't really fit together very well, and so it's resulted in a lot of costs to our industrial base. So you have to find a way to adapt to each other in a way where you can have trade. Maybe it's trade in non-sensitive goods. It's certainly trade that has to be more balanced. And you just have to manage that situation. Otherwise, you end up in the situation where we've been, where we have tens of thousands of factories going over there and millions of manufacturing jobs, and we just can't have that anymore. President Trump has put a stop to it, and we'll just keep working with the Chinese to make sure our economies can interact in a way that's beneficial for the United States.
Will you be using the economic levers that you certainly can be pulling? And that is all those Chinese stocks traded on U.S. exchanges. We have the most liquid, deepest capital markets in the world. China wants those markets. They want to sell those companies to our investors. Would you use that as a lever to try to get the Chinese Communist Party in line with trade?
Well, listen, we have enormous leverage over the Chinese. You have that issue with the stock exchange. You have certain products of ours that they need. They still rely on the U.S. dollar and will for a long time with respect to their international trade. So there's plenty of leverage. The goal is not to have some kind of tit-for-tat, leverage war with the Chinese at all. All of that is obviously there. President Trump has shown enormous strength in deploying certain tools to help them understand the leverage. Listen, I just got back from talking with them in Stockholm, and it was a very cordial exchange. We had a great conversation with the Chinese. We talked more about how to make sure critical minerals are flowing. We feel very confident in that direction. So, we're having constructive talks right now. If we ever feel like we need to, use leverage, we will, and we'll certainly always do whatever's in the national interest in terms of national security. That's not really a leverage point. That's just national security. So again, this is a challenging relationship, and we have to manage it, and the president's doing it wonderfully.
So you have confidence that they will continue to send the rare earth magnets into the United States? Because there was a report in the Financial Times a couple of weeks ago that they were pressuring companies before they sent any rare earth minerals or magnets. They wanted to know where they were used. They wanted data from these companies. You feel confidence after your meeting?
We do feel confident, and part of this is in the data. We've already seen the rare earth starting to flow in a much better way since in April, and since our meeting earlier this week, we have even greater confidence on this front. Listen, the more we have government-to-government communication, from our staff all the way up to our leaders, the easier it is to manage these challenges. Our problems with China aren't going to go away overnight. We're fortunate that the president understands this and has equipped his advisors to deal with the problem. Yes,
great point. And then there's the European Union, Jamieson, and of course that was a surprise deal when you all were in Scotland, a big upside surprise for the deal with the European Union. The EU Trade Commissioner now is reacting to the reciprocal rates on X. And the commissioner is writing right now on X, the new U.S. tariffs reflect the first results of the EU-U.S. deal, especially the 15% all-inclusive tariff cap. This reinforces stability for businesses as well as trust in the transatlantic economy. EU exporters now benefit from a more competitive position. The work continues, writes the EU leader. I want to get your take on that deal, because should we be looking at the EU deal as something of a level to look at in terms of what other deals that you may be doing look like, a precedent?
So I would say that our deals are country specific, and with each country we have different issues. The EU deal is historic because we are finally breaking away from the old trade policy that over 70 years has resulted in offshoring by U.S. companies. And now we have a situation where Europe has agreed that the United States needs to have a tariff. They've acknowledged that our trade deficit is a legitimate problem for us and that they need to fix it. And we've agreed together to move forward in a cooperative way, not with retaliation, not with anything like that, but in a way to have mutually strengthened economies where the U.S. can eliminate its deficit and the EU can invest more into the United States. They can buy more energy from the U.S. instead of buying it from places like Russia and elsewhere. Following on the president's win at the NATO summit a few weeks ago, this EU-U.S. deal really puts us on a new and improved path forward with the EU. And listen, it's good for America, it's good for the EU, and I'd say it's good for the world.
Yeah, fresh off of the president actually getting the Europeans to pay for their own defense and going up to 5%, the NATO countries. That was also incredible. But what about Canada? The prime minister is reacting to the president's moves as well. Of course, President Trump raising the rate on Canada from 25 to 35%, saying that our northern neighbor is failing to curb the flood of fentanyl and other drugs into the country. That rate effective today. How can Canada do a better job of curbing those drugs into America?
Well, they can do all kinds of things, right? It's an enforcement issue, really. Sometimes we hear statistics like, oh, there's only 1 kilogram of fentanyl coming over the border. What that tells me is there's not enough enforcement, right? That's not a point in favor. That means not enough is going on to stop this. Otherwise, you'd see there's more, and we know there's more. The other thing, too, with Canada, recall that they had some retaliation early on, and the president, he just needs to make sure that his order is effective. He's trying to get these countries to make the right choice. It's not about punishment. It's about trying to protect American interests, whether it's in trade or public health and security like fentanyl. And so Canadians, I think they understand that. We try to have a good relationship with these folks. They're right to our north. But we're also not going to stand by while Americans are killed or while the Canadians retaliate against our legitimate efforts to fix this.
Jamieson, how many more deals should we expect by year end?
I mean, listen, it's going to, well, first of all, it depends on the president. It could be a handful. It could just be, we have the tariff set and we don't need, more complex deals. As the president puts it, a tariff is a deal. A deal is the terms of trade we're establishing with our partners. Everyone is very eager for a deal, of course, and the president will go through country by country and determine which ones make sense.
All right, we'll be watching that for India as well. Jamieson Greer, great to have you this morning. Thank you, sir.
Great, thank you.
All right, we'll see you soon. We'll be right back.